Hello students, welcome back to the channel. I hope you all are doing well. Today we are starting with a new subject, management accounting. Okay, which is a part of group 2 syllabus. And from that subject we are going to begin with the first chapter, which is introduction to management accounting. We will be covering this in a very simple and understandable way. So don't worry if you are hearing these terms for the first time. Okay, and also always the PDF notes will be shared in the WhatsApp group, so make sure you join using the link in the comment section. Okay, so let's begin. We will go step by step in a very simple way, so that even if you are learning for the first time, you will be able to understand it easily. Okay, now what is the purpose of accounting? What is the purpose of accounting? Accounting is like a language. It is a language of business. It is a language of business. Just like we use languages to communicate with each other, business use accounting to communicate their financial position. Their financial position like what? Like profit, expense and liabilities. So the main purpose of accounting is to give useful information to different people. Okay, and we call these people as users. Okay, so these users can make good decision about the business. Different people uses this information, accounting information, for different purposes. That is, the major users along with their financial information needs are given. Okay, the first is owners or investors. Investors are the people who invested money in the company. Okay, they are interested in knowing how well the company is performing. They check the accounting reports to see if the business is making profit or loss. Okay, the primary objective of accounting is to provide what? Is to provide necessary information to whom? Owners or investors, relating to their business. Okay, investors are the people who invest in the company, and the shareholders of the company are interested in accounting information. Why the shareholders are interested in accounting information? With a view to ascertain the profitability and financial strength of the company. That is, they check the accounting reports to see if the business is making profit or loss. This helps them to decide whether to buy more shares or sell the shares or continue holding the shares. Okay, the second is management. The next category is management, who is interested in accounting informations. That is, management generally there is a separation of ownership and management functions. The management require a different set of financial information which help them in internal decision making. That is, management refers to the people who are running the business, like managers, directors, etc. Okay, they need detailed internal financial information to take the decision. Okay, so they use accounting to plan the business, control the cost, prepare the budget and improve the efficiency. So the management accounting is especially useful for the purpose because it helps in decision making. Now the third point is creditors. Creditors, trade creditors, debenture holders, bankers and other lending institutions are interested in knowing the short term as well as long term financial position of the company. That is, creditors are banks, lenders and suppliers who gives loan or goods on credit. Okay, so they check accounting reports to know the financial position of the business. They want to make sure that the company has enough money to repay the loan or credit. If the report look good, they feel confident to give us credit. Okay, so the financial statement provide the required information for ascertaining such position. Next is regulatory agencies. That is, regulatory agencies are the bodies like SEBI, RBI, Income Tax Department, etc. So various governments and other agencies use accounting reports not only as the basis for tax assessment but also evaluating how well the business are operating under the regulatory framework. That is, they check whether the companies are following the law, rule, and accounting standards. They use accounting reports to monitor and regulate the financial activities of the business. The next is government. That is, government uses accounting information mainly for tax purpose. That is, they want to know how much income the company earned so that the correct amount of tax can be collected. Also, they use financial data for policy making and economic planning. Next is potential investors. That is, potential investors uses the information in accounting reports to greater extent in order to determine the relative merits of various investment opportunities. Potential investors are the people who are planning to invest in the business but have not yet done. Okay, so before investing their money, they want to be sure that the company is financially strong and profitable. So they study the accounting reports to understand how much profit the company is making, what is their financial position, and whether the business is growing or not. Now, next is employees. Employees also uses financial information of the company. That is, they want to know whether the company is growing or not. And if the company is doing well, employees may get bonus, salary, or promotions. Okay, so they also feel more secure in their job when the company is financially strong. So employees are interested in earnings of the enterprise because their remuneration depends on the profits earned. Okay, next is research. Research scholars in their research in accounting theory as well as business affairs and practices also uses accounting data. Researchers and academic experts use accounting data for study and analysis. That is, they do researches on business trends, accounting practices, and financial performance. So they uses the information to improve accounting theory and also develop better business system. Okay, now there are three branches of accounting. First one is financial accounting, cost accounting, and management accounting. Next is, what is management accounting? Management accounting refers to the presentation of accounting information to management by the management accountant in such a way to assist them in managerial functions of decision making, planning, control. Okay, that is, management accounting means that is presenting accounting information to management. Okay, that is presenting accounting information to whom? To management in such a way that it helps the managers and management to take decisions and also helps in planning and controlling. So in simple words, management accounting is not about preparing accounts. It is about using the accounts and reports to help the management to take the right decision for running the business better. So it deals with the creation and analysis and presentation of financial data in a way that support the goals of the company. So management accounting deals with creation and presentation of accounting information for managerial and other decision making purpose. So the purpose of the management is to what? Is to assist the management. To assist whom? To assist the management in running the business in a way that will improve the performance of the business. So next is scope of the management accounting. That is, the scope of management accounting is very wide, that it includes all the areas where accounting helps in managerial decision making. Some of the key areas are: it helps in budgeting, planning, and forecasting for the business. Next is, it is used for measuring the organizational performance at different levels like departments or branches. And also it helps in comparing the it allows the company to compare performance between different time periods or different companies. Okay, and also it support the management in improving the efficiency and effectiveness of the operation, and it helps in evaluating the past and future investment. For example, whether to invest in a new machine or a project. Okay, it helps in evaluating the past and future investment. Okay, it helps to compare with the past and future investment. Next is it advise on product decision, like what price to fix, which market to serve, and what selling strategy should we use. Okay. Next is it guides in make or buy decision, whether the company should produce a component in or outside the business. Okay. Okay. Next is it helps in capital budgeting decision, that is whether the company has to invest money or to choose between different alternatives. Okay. Next is it supports strategic decision making, like including long term planning and also business policy decision. Okay, just read it. You can just read the scope of management accounting, don't just by heart. Okay. Next is evolution of management accounting. The International Accounting Federation has described the evolution of management accounting in 4 stages, and based on how it developed, management accounting had developed over time. The first stage is prior to 1950s. So 1760 to 1950, this was stage 1. Okay, this was the initial stage, and here the accounting. Okay, accounting was mainly used for what? For cost determination and financial control. Okay, first accounting was used for cost determination and financial control. Business focused on knowing how much it costs to produce something. Okay, the first stage was 1760 and 1950 to 1950, and main focus is on determining the cost. Accounting was mainly used for determining the cost and financial control. Okay, next is stage 2. Stage 2. In this stage, accounting started being used for management planning and control. Okay, that is stage 2 was used for information for planning and controlling. That is, report were used not just to record the cost, but also to plan and control business activities. And third stage is 1965 to 1985, third stage. Okay, reduction, and the focus shifted toward to reducing the waste and improving the efficiency in the business. Okay, the management accounting began to help in making operation more effective. Okay, it focus on reduction of waste of resources in the business operation. Next, fourth stage, 1985. This is the modern stage, and here the management accounting is used for creating value. How to create value? By using resources in the best possible way. Okay, optimum utilization of resources, and it helps the business to stay competitive and grow strategically. That is, fourth stage is creation of value through effective resource use. Just study the stage. In the first stage, it was for the cost determination and financial control, and for second stage, it is for information for the management and planning control, and third is for reduction of waste of resources in the business process, and fourth stage, creation of value through effective utilization of resources. Just study this. Okay. Next is the management accountant and strategic decision. Management accounting not only helps in day-to-day decision, but also in making big strategic decision for the long-term success of the business. So it helps the managers to plan strategy by answering important business questions like who are the most important customers, and how can the company deliver the value to the customers. That is, the company needs to identify which customer bring the most value, or are most profitable. By knowing this, they can focus their service offers and attention on those key customers. Okay. Next is what substitute products exist in the marketplace and how do they differ from the products of the company in terms of features, price, and cost and quality. That is, company must be aware of the competition. That is, what other products are available in the market and that can replace their own product. So the management must also analyze how their own products are better or worse in terms of cost, features or quality. Okay. Next is what is the most critical capability of the company, which may be technology, production or marketing. That is, here the management accountant helps to identify the main strength of the business, whether it is technology, whether it is production efficiency, marketing skills or something else. Okay, this helps the company to focus and grow in its strong areas. Now third one is how can we leverage it for new strategic initiatives. That is, once the main strength is identified, the company needs to think how can we use it for new ideas, products or market expansion. This is called leveraging your capability, using your strength to grow your business. Okay. Now next is, will adequate cash available to fund the strategy or will additional fund need to be raised. A strategy can only be successful if there is enough money to support it. Okay, so management accounting checks whether there is enough cash available or if the company needs to arrange extra funds through loans or other source. So management accounting information, okay, helps the managers to formulate the strategy by answering the following questions. Next is the relationship between management accounting and cost accounting. It's financial accounting. And it is very, very important for the exam. 7 marks. Okay. Now, let's now understand how management accounting is different from the financial accounting. The purpose of the financial accounting is to classify, analysis, record, summarize and the financial transactions of a particular period of the company. That is, financial accounting is done to record, summarize and report the financial transactions of the business, and it shows the overall financial position of the company. Financial position like profit and loss, whether the company is earning profit or loss, or their assets and liabilities, etc. And it is used mainly for the external reporting like investors, tax authorities, etc. Okay, whereas management accounting on the other hand is done to help the management. Okay, management accounting helps the management to take what to make effective decision about the business. So management accounting is done to help the management to take decisions. So it uses the data from where? It uses the data from financial accounting, cost accounting, budget, etc. to help with planning, control and strategy. So management accounting is meant only for internal use by the company's managers. Okay, next is application. Financial accounting is prepared to reflect true and fair picture of financial affairs. That is, financial accounting is applied to maintain accurate books of accounts and prepare final accounts like profit and loss account and balance sheet. Whereas management accounting helps the management to take meaningful steps and strategies. That is, management accounting uses all these data and helps the managers to take decision for the future like budgeting, cost control, project evaluations, etc. Next is scope. The scope is pervasive but not as much as management accounting. That is, scope of the financial accounting is limited to recording the actual transactions and reporting, preparing reports. Whereas the scope of the management accounting is broader. That is, scope of the management accounting is much wider. It includes financial data, cost data, budgeting, forecasting, performance analysis, etc. Okay. Next is information type. Financial accounting deals with quantitative information like numbers, money values, transactions, etc. Whereas management accounting deals with both quantitative and qualitative. That is, for example, employees efficiency, market trends. It is uh, management accounting deals with what both quantitative and qualitative information. Next is interdependence. It is not dependent on management accounting. Financial accounting is done independently and it doesn't need management accounting. Whereas management accounting is basically decision making accounting and depends on information created by financial accounting as well as cost accounting. But management accounting depends on financial accounting for its base data. Okay, next is statutory requirement. Financial accounting is legally required under Companies Act, Income Tax Act, etc. Every registered company must do it. Okay, it is legally mandatory to prepare financial accounts of all the companies. Whereas management accounting has no statutory requirement. That is, management accounting is not compulsory. It is done voluntarily to improve the internal management. Next is format. Financial accounting has a specific format for presenting and recording information. That is, financial accounting follows standard formats and rules like Schedule 3 of the Companies Act, accounting standards, etc. Whereas in management accounting, there is no set of format for presenting information in management accounting. Management accounting has no fixed format. That is, managers can design any report as per their needs. Okay. Next is users. Mainly financial accounting is used by the external users like shareholders, investors, lenders, governments, etc. Whereas management accounting is only for management. Okay, it is used by only the internal management team. Management accounting is only used by the internal management team, whereas financial accounting is used by the external users like shareholders, governments, etc. Last one is verifiable. The information presented is verifiable. Information in financial accounting is based on the actual records and is therefore verifiable and audited. Okay, it is recorded on the based on actual records and it is audited, so it is verifiable. Now, management accounting, many reports are based on future estimates and predictions, so they may not be verifiable. Okay. Next is difference between cost accounting and management accounting, and this is also very important. 7 marks. Okay, for theory. And cost accounting versus management accounting. Let's understand the difference between cost accounting and management accounting. Meaning cost accounting revolves around cost computation, cost control and cost reduction. That is, cost accounting is mainly about calculating cost, controlling the cost and reducing the cost. It helps to find out how much it costs to produce a goods or service. It record material, labor and overhead cost. That is, cost accounting is used to find out how much cost is to produce a particular goods or service. Whereas management accounting is broader. It helps the management to take important decisions and it includes cost data, financial data and even forecast or even non-financial data. Next is application. That is, cost accounting is used to avoid unnecessary expense. That is, it ensures that business stay within the budget. Cost accounting prevents business from incurring cost and beyond the budget. Okay, it avoids unnecessary budget. Whereas management accounting helps the management get a complete picture of business operation. It supports planning, strategy, and for future growth of the business. So management accounting offers a big picture of how management should strategize. Okay, next is scope. Cost accounting has a narrower scope. It focuses only on cost related matters, whereas management accounting scope is much broader. Management accounting has broader scope. It includes cost, financial, statistical and even non-financial information. Next is measuring grid. That is, cost accounting deals with quantitative data, mostly numbers and monies. Okay, whereas management accounting deals with both quantitative and qualitative. Okay, now next is subset. Cost accounting is one of the many subset of management accounting. That is, cost accounting is a part of management accounting. That means it is one of the tool or sub branch used in the management accounting. Whereas management accounting is the universal set. Management accounting is like a complete system that include cost accounting, financial accounting, budgeting, forecasting, etc. Now, basis of decision making. The cost accounting does not focus much on decision making. If it only helps in decisions that are based on the past cost data. Okay, the task of the decision making is very less. Even if there is some, it is based on the historic information about the cost. Okay, historic and predictive information is the basis of decision making. That is, management accounting is mainly done for the decision making. It uses the both past and future data to support the good decisions. Next is statutory requirement. Cost audit accounting. Cost accounting may be legally required in some industries. For example, in manufacturing or regulated industries where cost audit is mandatory. So, cost audit is dependent on management accounting to be statutory audit of cost accounting is requirement in some specified industries. Next, management accounting is not required by law and it is not compulsory. Okay, next is dependence. Cost accounting is independent on management accounting. Cost accounting works independently. It does not need management accounting, whereas management accounting depends on cost accounting. Okay, and it is used by management, shareholders and vendors, and it is only used by management. Cost accounting is used by management but also shareholders, vendors and other stakeholders, whereas management accounting is used by internal management. It is confidential and not shared outside. Okay, that's it. So the next topic is role of management accountant in modern business world. That is, many of the students make the mistake of mixing traditional and modern roles of management accountant in the exam. That is completely wrong. From the exam point of view, you must learn both separately. Okay, first one is functions of management accountant. Okay, this is the traditional role of management accountant. Okay, traditional. If the question is asked about traditional role of management accountant, then you have to write these points. Okay, so the basic internal role of management accountant in any business, okay, is first point is planning and accounting. So management accountant prepare an accounting system covering cost, sales, forecast, profit planning and production planning and allocation of resources. That is, management accountant help the business to plan for the future. They prepare budget, they forecast and plans related to the production, profit, sales and resource allocation. Okay, for example, they helps to decide how much raw material is needed, how much company should spend and what are the profit targets. Okay, and also helps in short term and long term planning like capital budgeting, like big investment. Okay, next is controlling means after making the plans, the next step is to check whether everything is going as planned. So management accountant helps to control the business activity using tools like standard costing, budgetary control and cost control techniques, which you will learn later. Okay, if the costs are going too high or sales are falling, they report this and suggest corrections. Okay, so after making the plans, so they have to check whether everything is going as per the plan. Okay, now third point is reporting means they prepare reports and submit them to the top management, and this report help the management to understand what is going wrong, why the profits are low, which department is performing badly, and based on this management takes better decision. Okay, and fourth point is coordinating. In a company, different departments like production, sales, HR works together. So the management accountant act like a link and ensure that all the departments are coordinated. For example, production should know how much sales is expecting, and finance should know how much money is needed for raw material. So all the departments are interdependent to each other. Next is communication. Management accountants also communicate results and plans to others. They make a report that explains company's position, sometimes for managers, sometimes even for outsiders. Through the reports, they explain whether the company is doing well or need any improvement. Okay. And next point is financial evaluation and interpretation. That is, they do not just collect data, they just analyze it. They find meanings in numbers and explain them in a simple languages to the manager. That is, for example, if the profit is low, they explain the reason behind it. This helps the management in taking decision. Next is tax administration. They handle taxation works like preparing report for tax authorities, ensuring taxes are paid on time, like avoiding penalties, etc. So they also helps in planning taxes to reduce the company's tax burden legally. Okay. Now, next point is evaluation of external effects. There is sometimes government policies or economic rules changes. These changes may affect business decision. So the management accountant check how much the business is impacted and inform the management to take necessary decision. For example, increase in the price, reducing the cost, etc. So there may be changes in the government policies and existing laws. So these amendments means changes, and policy changes can affect the business goals. So the management accountant check how much the business is impacted and inform the management to take necessary actions. Okay. Next is economic appraisal. They keep an eye on the economy like inflation, interest rate, government budget, etc. So they prepare report and tell the management how such economic changes may affect the business, and this helps the company to take timely precautions. Okay, so all these are traditional roles and the basic behind the scenes work of a management accountant to help the managers for planning, controlling, and success of the business. Okay. One more point, asset protection. That is, management accountant separate fixed asset register for each type and provide internal checks and control to protect the company's asset. They also create the rules and regulation for each type of fixed asset and get insurance coverage for all types of fixed asset. That is, management accountant maintain proper records. The management account keeps full and updated records of all the assets, like when they are bought, how much the cost, where they are used, and how much they have depreciated, and what is the current value. So this helps in tracking each assets properly, and also they create a strong internal control system. Example, locking system for cash, assets control for expensive machines, regular physical verification of stocks and fixed assets, and also they suggest insurance policies to protect the assets from fire, theft, flood, etc. If something happens, the company can recover the loss through the insurance. Now, next is the management accountant and modern business world. If the question is asked about the functions of the management accountant, and if there is in the modern business world, then you have to write these points. Okay. Today's business world is fast changing and technology driven, and also it is globally competitive. So the role of the management accountant has also evolved. It is no longer just about accounts and reports. Now they act like a strategic business partner who helps in big decisions, future planning, and business growth. So, uh, so first point is global competition. Today's business are competing not in their city or country but across the world. So the management accountant must study international prices, competitor strategies, cost difference, and it helps the business to reduce its cost without losing the quality. For example, if an Indian company is competing with Chinese brand, the management accountant helps in cost comparison and give strategies to stay competitive. Okay. The second point is changing product life cycle. Product demands keep changing. What is popular today might not be popular tomorrow. So, the management accountant helps the management to decide when to introduce a new product, when to stop a non-performing product, whether the product is profitable or not. Example, in mobile phone industry, frequent updates are required, and the accountant helps in pricing, cost analysis, and also helps in the product planning. Third one is advance in manufacturing technology. Modern business uses advanced tools like ERP software, so and dashboards to manage all the data. So the management accountant use these tools, ERP software, SAP, and also dashboards to manage the data. And uh, they uses these tools to track business performance in the real time basis, and also it reduce the manual work. Okay, so this improve the speed and quality of decisions taken by the top management. The fourth point is impact of information technology. Management accountant now work with IT departments, and they helps in designing management information system (MIS), understanding big datas, uh, preparing user friendly reports for decision makers. For example, they help us to set up systems that automatically shows daily profits, loss, sales, and trends. Okay, and fifth point is environmental and sustainability issues. It is modern business care about eco-friendly products. The management accountant uh, helps to uh, helps or tracks cost of pollution control, waste management, also in helps in energy uses, recycling, etc. And he also helps the business to follow environmental laws and save the cost through green methods. Example, calculating the cost savings if the company switches to solar power. Okay, now sixth point is deregulation and privatizations. Whereas today's government policies like GST, income tax laws, import export laws keep changing, right? So the management accountant keep track of these and gives advice to the business. That is how to follow these new rules, how to take advantage of benefits under new policy. Example, if GST rate changes, the accountant recalculate pricing and profitability. Okay. Next is focus on value creation. Modern accountant do not just save cost; they also help to create value. This includes improving product quality, building customer satisfaction, and also planning for long-term growth. So it's not just about how much profit uh, earned today. It's also about how strong is our future. Okay. Last point is customer orientation. Today, customer have many choices. So the management accountant study customer needs, suggest way to offer better service at lower cost, and also helps to set a competitive price without affecting the profit. And also being a strategic partner in the business. Most importantly, the modern management accountant sits with top level team. He is not just an accountant now. He is a decision maker, he is a planner, and he is a risk analyzer and strategy advisor. He helps to shape the future of the company by giving the right advice based on the numbers and data. And important thing is that if the question asked about the traditional method, you have to write the other one. Okay, and if the question asks about the modern role of the management accountant, write this. Okay, don't mix both, otherwise you will lose the mark even if your answer is lengthy. Okay, write only these points, by heart this. Okay, so that's all for today. Thank you.